Hello world, welcome to Building Black Wall Street. This is going to be a short video. I did a video last week saying we should thank President Barack Obama for the Dow Jones getting to 20,000, and the Dow just reached 20,000 for the first time in history. So for investors, this isn't really a big deal, but for the public, this is going to be a big deal because this is the first time the Dow has done this. As an investor, this is a big caution sign because what it points out actually is that a lot of companies are selling above their intrinsic value, and we try to get companies when they are selling well below their intrinsic value. I think Benjamin Graham said we should aim to get companies at 66% of intrinsic value. But history has shown us that most private investor or mom and dad investors usually buy high and sell low. Let me erase that. They're not investors, because an investor does not put themselves in a position where they buy a stock higher than its intrinsic value. We aim to focus on analyzing the financial statements and finding companies that are selling well below their intrinsic value, which is kind of a margin of safety for us. But I just wanted to do this video again to thank President Barack Obama, because if it wasn't for him, we wouldn't be at this milestone number that the Dow has reached, because when he came into office, the Dow was getting closer to around 6,000, which it reached March of 2009. So this is a far cry from that. And as an investor, I'm hoping animal spirits return to the market, meaning people get too optimistic about certain companies, hopefully companies that I own. But again, this is because of the policies the Obama administration put in place. You're going to hear otherwise from a lot of other news outlets, but you can't base this number on 2 or 3 months of the new president and the things that he plans to put in play. You have to base it off of the last 8 years and what was put in play to allow us to get to this point. And the Obama administration did that beautifully. This is a Bloomberg article marking the milestone of the Dow reaching 20,000, and the heading is actually your gift from living through Brexit and the election. And if you look at the date, January 25th, 2017, I knew this would happen. I kind of pointed it out during my last video a week ago because I wanted to thank President Obama before there was a transition of power to our new president. And I already saw in the news how he wasn't getting the credit for this. All credit was going towards the new president. And that's kind of foolhardy, and whoever engages in that thinking isn't being rational and viewing the facts correctly. So that's why I made that video. I wasn't trying to be an economic forecaster. I have no interest in trying to forecast what the market is going to do. And as an investor, a student of what I call Graham and Buffettville, I actually like it more when the market is down, because that gives me a opportunity to buy companies when they're selling below their intrinsic value. As the price goes higher and higher, those opportunities are not available. And as an investor, I try to stay out of the market or out of buying companies as markets are reaching a new high. Further down on that Bloomberg article, as you see the heading of this graph, it's saying the Trump rally makes history, talking about the Dow performance since November 8 is the best among all elections since 1900s. and it's looking like the Dow almost advanced 9% since then. And I do believe the new president is a contributing factor because he's been talking about repatriation, lower taxes overall, bringing jobs back to the U.S., things of that nature, which the market looks at as favorable because it puts companies in a position to make more profit and it gives people more purchasing power. But again, like I pointed out in my video from last week, we wouldn't be at this point if the Obama administration hadn't done everything correctly from a financial standpoint in order to allow the Dow to advance and the economy not to collapse. If that administration would have made one wrong move, the Dow might be extinct. And that's something a lot of people are forgetting right now. But investors, well, I'm not going to call them investors, but people who participate in the market are short-sighted. That's part of the problem of why they buy high and sell low. And again, even though the new president is a contributing factor to the Dow passing this milestone, he is not the cause of it. The old administration is the cause because they did everything right. And that created a huge tailwind for the market. And that's why we are at the point we are at right now. To go one step further, if we are looking at the economy as a whole, it's better to look at what the Standard & Poor's or S&P 500 is doing versus the Dow, because the Dow is only 30 companies and the S&P is 500 companies. So it is a much better indicator of what the economy is doing and what these companies are doing. Seems like I'm getting fuzzy visual. I hope you guys bear with me. Okay, there we go. We just use the Dow because that's what most people are familiar with when we talk about investing or the stock market. But the S&P is the better indicator. I think it represents around 75% of the largest companies or the economy, if I'm not mistaken. And right now, this is what the market is doing right now. It's about to open in the next 2 minutes, and it's looking like, the Dow is going to continue marching upward. So I hope all my value investors proceed with caution, because as the Dow continues to increase, that means our opportunities continue to decrease. So we have to be very mindful of the companies we're getting shares of, so we don't buy high and sell low like most people that participate in the stock market do. I hope you guys stay blessed and stay tuned. Peace.